welcome aboard.
Please welcome to the stage me, Axios One Big Thing editor and host, Nyla Boodoo. Good morning, everyone. Thank you so much for being here, for waking up early with us to discuss tax policy, the tax code, and financial literacy here in DC. For those in the room and for those watching online, you can follow along using the hashtag Axios Events. As you just heard, I host our Axios One Big Thing podcast, where we talk to leaders who are shaping conversations around business, politics, and culture. This morning's episode actually features a conversation from a previous event we had earlier this week, our Axios What's Next Summit. I was in conversation with Senator Joe Manchin. So take a listen to that. That's out this morning. I would love to have you listen and subscribe. And without further ado, I'd like to welcome our first guest this morning. He's a member of the House Ways and Means Committee, also vice chair of the New Democrat Coalition, representing Illinois' 10th District, Congressman Brad Schneider. Thank you. Good morning.
Good morning.
Had to get that 10 in there. We were just talking about backstage about redistricting and what that district looks like. I wanted to start, though, actually we were also talking about bipartisanship backstage, and I wanted to ask you about the bipartisan tax bill that's currently stalled in the Senate, but passed in the House. Can you give us a smart remedy summation of what you're so excited about with this new tax bill?
Sure. First, thanks for having me here. And I'll start with the fact that it's bipartisan. The fact that, especially in this Congress, which will go down, I believe, is one of the most hyper-partisan in history, we were able to work through the committee and work with each other and get to a compromise. And it's a compromise that has a number of things. Obviously, the importance of investing in innovation, American innovation. What I talk about all the time, we're here sitting 4 years since the beginning of the COVID pandemic, and the world still looks to the United States. The vaccines that everyone wants are created here in the United States. That innovation didn't happen by accident, didn't happen overnight. We need to continue to invest. So we have the R&D tax credit. But we're not going to lead in innovation and creativity if we're not also investing in our kids, in our children. And so we know from the American Rescue Plan, we cut child poverty by 50% with the enhanced child tax credit in the rescue plan. We didn't get as much as we would have liked, but we got more than we started with, and that's part of this bill. The low-income housing tax credit, investing in our communities to make sure that they provide housing for people living in those communities, is all part of that view to the future. It passed the House overwhelmingly, and sadly it's stalled in the Senate, less apparently on policy than procedure. I know Ranking Member Crapos is drawing his lines in the sand, and he was at the table for the original negotiations, and then the goalposts move, unfortunately.
Right, so what's your message to the Senate then, now that this is stalled, in terms of how crucial this is?
Well, my message to the Senate is a consistent one, not just in this case. Get it done. Right? This is something that is good for the American people. It's good for American companies. They're trying to lead the way on a global stage where other countries are investing in innovation, and the lead we've always enjoyed is getting smaller, and we're not going to retain it unless we continue to invest in that innovation. But invest in our people, invest in our communities, and there's no reason this shouldn't get done. It has bipartisan support, overwhelming bipartisan support in the House. That's closer reflection, I would argue, of the people we represent. It should have that same overwhelming support in the Senate.
You mentioned the child tax credit. I think that got a lot of publicity when it was first announced. When we think about financial literacy, when you think about your constituents, are people aware of the tax credits that are available to them?
Some, but not enough. We can always do a better job of making sure people understand what's available to them. Even though all indicators show that this economy is strong. After the pandemic, the United States came out stronger than any other country, in no small part because of the investments we made in the American Rescue Plan and the legislation that passed in the 117th Congress. But people don't benefit from those things that we did unless they're aware of that. And so I know I work very hard at home trying to make sure my constituents understand it and understand what's available to them and what opportunities that means for them. How do they get those credits? How do they use those credits and invest in their future?
So I wanted to ask you about one part of this bill, the American Investment and Manufacturing Act. Allowing, and I'm excited, I feel like I'm back to my Reuters days because I can talk about EBITDA here and this crowd loves it. But this would allow for a return to back to its pre-22 levels, right? How crucial is that for manufacturers?
I think it's really important. The most important thing for manufacturers is stability and clarity, knowing that the tax regime and other policies coming out of Washington are going to be consistent this year, next year, and into the future. Very few businesses plan month to month. They really are looking more year to year, and I did strategic planning before I came to Congress. Ideally, you want companies who can look forward and make investments they're going to pay back in 5, 10, 15 years, because that's where the real opportunities to grow our economy are going to exist down the road. Other countries are doing that. We need to make sure we're doing that. So allowing them to focus on their business, to have the stability, to create the cash flow, to invest in both people, manufacturing facilities, new technologies, that's crucial. And because we keep going back and forth, I think companies are slower to make decisions, and oftentimes not even slow, but delaying or deferring those decisions until they get clarity from Congress. We need to move forward with bipartisan, sensible tax policy.
Right, and I want to ask you about the tax code in a moment, but first I just want to go back to what you said about stability. I mean, as you think about this November, I'm not sure that anyone is looking at this year and thinking about political stability, to be frank with you. Like, I wonder how you think businesses are handling that.
Trust me, you don't have to be frank. I live it every day. The whipsaw of what's happening it's difficult for us here, but it's really hard for folks at home who are just trying to get through the day-to-day challenges, whether it's the challenges in their business or raising their family. And yes, there's a lot of uncertainty about what happens in November. That leads to more uncertainty. Many of the provisions of the 2017 tax bill are expiring in 2025. We have other pieces of the Inflation Reduction Act that flip or change in 2025. And there's all types of conversations of what is Congress going to do. If we can telegraph what we're going to do, get it done, and free American workers, American companies to move to the future, I think it'd be good for all of us.
So here's your chance to telegraph about the tax code in particular. And as you're talking about these key provisions that expire next year, what is your sense of where the House is when it comes to working on that? It
depends where the House is after November, right? It depends who has the Speaker's gavel. I hope that the House majority flips, that Republicans, or Democrats rather, take the majority. And in that case, Chairman Neal will take the gavel again in Ways and Means. And I think you can look at what we've done in the past. At the end of 2022, the Ways and Means was assigned the task to come up with $2.4 trillion of revenue. We had a number of hearings, we laid it out there, and everyone had a chance to see some of the things we would do. I imagine it would include things like addressing the corporate income tax rate, but making sure it's one that ensures we're competitive. We also have a lot happening in international tax with Pillar 2, making sure we're at the table and leading and protecting our companies' interests so that it's a level playing field and American companies can not only compete, but win where they're best positioned to. I would hope we can focus on that child tax credit to bring down child poverty, to invest in young people and make that kind of a difference. And one of the things you've seen is Democrats have led the way in looking at ways to create incentives to address climate change. And one of the parts that was something that was a part of the Inflation Reduction Act was legislation I led on sustainable aviation fuel. 2% of our greenhouse gases are coming from air travel. We're not going to give up air travel. It's important for commerce. It's important for the future of the world. But if we can remove the greenhouse gas emissions, and potentially we can remove it more than 50% and getting close to 100% reduction, that's a huge game changer. But to get the market moving, the signals we can create, the incentives we can provide through the tax code, through credits on production of sustainable aviation fuel can make a huge difference.
Right,
So
and
that's
when
one
you
example.
think about sustainable aviation fuel in particular, that's one that's so investment heavy. When you talk to people in that sector, they say one of the biggest challenges is just the investment in it.
Right, on the end use, in the planes, it's not investment heavy. Today's jet engines can use sustainable aviation fuel. It's on the front end, the production side. Company in my district, LanzaJet, just opened a major facility in Georgia. It takes time to plan. It takes major capital investment to build. And once it's up and running, you have to have the demand, and the feedstock and then the demand to make it worthwhile. And we can provide the platform for that through smart tax policy and our legislation, what we call Sustainable Skies, in the last Congress, and whether we call it SAF 2.0 or whatever it will be going forward. It was part of IRA. We can make it better, we can make it stronger, and we can make sure the United States leads in this critical development of SAF.
I want to go back to something you said, though. If Republicans take the House, what is your level of confidence in terms of doing all of, let's just go back to the tax code. If we saw the bipartisan work that happened here with this tax bill, do you imagine there will be similarities when it comes to the tax code, regardless of who's in control?
It's hard to say, and I'll go back to, we saw this agreement made between Senator Wyden and Chairman Smith. It came to the House, we worked in good faith and passed it overwhelmingly, and then it went to the Senate and it fell apart. I don't have enough fingers to count how many times we've started down a path working together and the goalposts moved in this Congress. And if you look at what Congress has achieved over the last year and a quarter, there's not a lot of pegs to hang our hat on. You compare that with a similar majority in the last Congress, and you can talk about the Inflation Reduction Act, the CHIPS Act. It is possible to move legislation forward. So my hope is, irrespective of who controls the House next year, that we can find that way to reach across the aisle and get things done. I know I'm committed to doing that as part of the majority. Hope that's where things are. And I'll do everything I can if it turns out a different way.
You're vice chair of the New Dems. When it comes to the presidential election, I wanted to ask you about Project 2025, which is a plan that's been circulating for implementation of the federal government should Donald Trump win a re-election. On a practical level, I just want to ask what your reaction is to the very simplified tax code that has been proposed through Project 2025.
So you talk, I think this is the fair tax that Buddy Carter's introduced. When the name seems obvious, one of my best suggestions is to dig deeper and see what's underneath it. I believe in a progressive tax. Those who are more fortunate, those who reap the benefits of the amazing opportunities provided by American economy, American legal system, should be carrying a greater share of the burden. And what the fair tax does is pushes that burden on those who are struggling the most. It ends up creating effectively it's a consumption tax, adding to the costs. Some estimates say it would raise costs of goods and services by as much as 30%. It is not necessarily more simple. It's just a different form of complexity. I think what we need to do is, within the framework of our current system, look to level the playing field with what's happening around the world, make sure we're at the table and leading, but also work to continue to drive the incentives that have strengthened our economy over the last 100 years. And I'll go back to the R&D tax credit. The investment we make as a country into the ideas and innovations and creativity of the American people is what has allowed us to lead on new technologies, from semiconductors to pharmaceuticals to space exploration.
We're almost out of time. I just wanted to end on something that's not directly related to tax policy, but has certainly been overshadowing many things here in Washington since October 7th. You're part of a group that's now asking President Biden to support a temporary ceasefire in the Israel-Hamas war. What prompted this change for you?
It wasn't a change. Look, Hamas attacked Israel on October 7th in a heinous, barbaric terrorist attack. Hamas is a genocidal nihilistic terrorist organization. Israel has to make sure that Hamas can no longer rain terror over Gaza or threaten Israel, and that's what's happening. But in all wars, it's the civilians who are caught in the middle. And so from the very beginning, I've been working very hard to talk to the Egyptians, to the Israelis, to anyone about getting aid to those who are caught in the middle, and we need to continue to do that. A few weeks ago, President Biden shared optimism that we were getting closer to an agreement that would bring the hostages home. There are 8 Americans held hostage in Gaza. One, his family is from Chicago, a dear friend of mine, Hirsch Goldberg, Poland. We need to bring all of those hostages home. We need to eliminate the threat of Hamas. But we also have to make sure that the Palestinian people have the opportunity to aspire for the same thing that Israeli families are aspiring for, to giving their kids opportunities for success, education, things that make for a good life, and having their national aspirations a state of their own.
Right, and the World Food Program this morning is talking about famine in Gaza.
We need to get that food in, and that's why I've got a meeting later today with the Egyptian ambassador. I called on every meeting I had with the Israelis and continue to have is get more aid in through Rafah. They're now coming in through, not through Rafah, through Kerem Shalom, coming in through the north, and you have the sea corridor that's being developed very quickly. Aid is getting into Gaza, but it's not getting to the people of Gaza, and we need to make sure that what aid gets in gets to those people. The ultimate goal is not just a ceasefire. A ceasefire will get us to the place of releasing the hostages and moving from absolute relief for the Palestinians to recovery. But the long-term goal has to be renewal, an idea of a real peace where two peoples who belong to the same land can live together side by side, embrace each other, and enjoy the benefits of that, which would include prosperity for themselves, but also for the whole region. So I continue to have a long-term perspective, but we have to get through this immediate crisis to get there.
Thank you so much, Congressman. I'm afraid we're out of time, but I appreciate you being here with us this morning.
Yeah.
Up next, our View from the Top moderator and founder of Storyline, Chris Freites.
Hey, thank you all for joining us this morning, and a big thank you to Intuit for making this entire event possible. I hope now you'll help me in welcoming the Executive Vice President and General Manager of Intuit's Consumer Group, Mark Nociani. Mark, come on up. Thanks, man. So I'm excited to talk to you. It's tax season, so I think we all have this on our mind. And I wonder, considering that TurboTax serves millions of American taxpayers every year, what trends are we seeing this tax season, and what do they tell us about the taxpayer experience?
Yeah, it is tax season. It's a lot of fun. I never thought I'd say that when I was in high school, but I am thoroughly enjoying this job. But I've been in the tax business for 15 years now. There's always one constant, is that every tax season is different.
Right.
It always has its own fingerprint, if you will. But 3 trends that we're really seeing right now. One is we're just seeing an the increasing trend of our customers having side gigs or self-employed, and we have just seen that accelerate this year, and we continue to see that. And it brings some complexities to those customers that we're equipped to handle. The second that we see is we see the impact of inflation and the value of the refund that our customers get. On average, last year, our customers got about $3,000.
Wow.
And so that money means a lot more this year than we've ever seen before. So there's this anxiety around maximizing their refunds that is unique this year. And then I'd say, the child tax credit, Representative Snyder just talked about it. That cohort of customers that are eligible for that are watching and waiting to file a little bit more than normal to see if the legislation passes. And of course, we encourage them to file because our customers will get that that retroactively applied to their tax return, and
So they don't have to worry.
so they don't have to worry. Absolutely, that's the big thing. And there is a lot of worry around tax season.
There's a lot of worry around tax season. And you hit on this complexity of the tax code. We've heard a lot about that. What is TurboTax doing to make filing easier?
You know, it's a great question because it's at the very heart of our product. When we launched TurboTax 30 plus years ago, at the heart of it was taking a very complex tax environment and making it very simple for consumers to file their taxes with confidence that they're doing it right. And we introduced this whole concept of an interview. And in the interview, we just ask simple questions and we get answers, and then we fill out the forms for our customers. And we continue to do that. We believe that that's at the heart and soul of our business. What's interesting, over those years since we've launched our product, the tax code has become significantly more complex. It's actually increased threefold since we have. It's over 6,000 pages of tax code between federal and state. And so there's just a lot more complexity. Fortunately, our software has also gotten better, and we've also introduced our tax experts, right? Because there is a need to talk to a certified tax professional to help customers make the best decisions, make sure they're maximizing their refunds, paying their fair share. Whether you're a consumer or a small business, the taxes are an important part of your financial life.
And that tax expert, I don't know that everybody thinks about, that you now have that ability, right? So
Yeah.
that's a nice, you can kind of call in.
Yeah, it's all, we've got a tax expert literally within a 10-mile drive of 80% of taxpayers in this country, which is really important because taxes are very local and very important, and vary quite a bit by state, by county, by city. So it's very, very important to have that tax knowledge close to our customers, and it's available at a click of a button for our customers through our TurboTax platform.
So you talked about that 6,000 page tax code, and I wonder, from your vantage point in the private sector and dealing with taxpayers every tax season, millions of those taxpayers, what could policymakers be doing to simplify this process for everybody?
Well, as I mentioned, like that's at the core of our a culture at Intuit for TurboTax as well as QuickBooks. What's really, really important is that we both work together to simplify that, because at the end of the day, our focus is on ensuring our consumers, our customers, have the best tax filing experience possible. And simplification is a big part of that. It's just become very difficult for customers to determine which incentive is right for them. How do you ensure that you're getting like earned income tax credit for the most important cohort in our customers that need that earned income tax credit to live and thrive and prosper? A lot of customers get that wrong because there's a lot of complexities around the tax form and the qualifications, et cetera. So for us, we're all about serving our customers. And tax simplification is at the heart of serving those customers and ensuring they're able to kind of live the lives that they want to live. Whether you're, again, a small business or a consumer or an individual tax filer, this is a very, very important part of their financial life.
Well, and piggybacking on that, I wonder, what does Intuit think about, the IRS has recently launched direct file program, right? Because they're also trying to simplify this.
Sure. I'm not sure. So there's a difference. There's the tax filing product, and then there's the tax code. Direct file isn't really simplifying the tax code. And, for us, we look at direct file as a solution looking for a problem. Like for years, every single American could file their taxes for free through companies like ours. We serve, I think over the last 10 years, we've had 124 million Americans file for completely nothing free in our products. And we continue to do that. It's a big part of our portfolio, both at the federal level and at the state level. And that's also true for many of our competitors, and we've had programs that are also collaboration with the IRS to offer free tax. And so we just believe that that's the best way to serve. Those are absolutely free. It costs the taxpayers nothing, and it costs the government nothing, because we build the software, we serve those customers, and there's a lot that we put in to building our products and to servicing our customers, right, through these amazing experts that we have across the country. So, our belief is let's continue to work together. We don't need another free filing experience, because we've got that, and we highly, highly encourage our customers that are eligible and that want that product to actually use it and file for free.
So we have just a few minutes left, and while I have you, I mean, you guys are the tax experts, right? So leave us this morning with some advice on how to make this time of year a little easier, a little less stressful.
Well, again, for us, I think the most important thing is I would highly, highly encourage people to look for a blended solution. Great software and technology, because at the core of what we do, we're a technology company, and there's so many advancements that make it easier for customers to understand and apply their life through tax code. But also, it's really important to have that tax expert. The ability to reach out to someone that you trust, and make sure that you're doing your taxes with an advocate for you. Because it is a very personal journey. Your taxes are a reflection of your life. So having someone that you trust, that's an advocate for you, that's really looking out to ensure you maximize your situation is really, really critical. And when you have that, then confidence comes, right? And that's what we really focus on. 3 things in our business. We focus on building an easy experience, focusing on customers' money, and doing that with complete confidence. And I think that's really, really important. That last element for any taxpayers, find someone you trust, because that goes a long way.
Trust goes a long way. We'll have to leave it there. It's a good place to leave it. Mark Notriani is the Executive Vice President and General Manager of Intuit's Consumer Group. Mark, thank you so much for making this possible, and thank you to Intuit for making this entire morning possible. Thanks so much.
Thanks, Chris.
Welcoming to the stage, Axios Chief Economic Correspondent, Neil Irwin.
Good morning, everyone. Thank you for joining us. Glad to be here for this event. Quick plug, to stay ahead of the curve on how the economy, policy, and markets collide, consider subscribing to the newsletter I write with Courtney Brown every day called Axios Macro. You can sign up at axios.com/newsletters. So, with no further ado, let me ask our second guest to come out. He's a senior fellow at the American Enterprise Institute, a tax policy expert, somebody I call whenever I need to understand the moving parts of the tax code. Kyle Palmer-Lowe, please. So, Kyle, this was discussed a bit in the earlier session with the congressman. 2025 is a big year for tax policy. Explain the starting point of why this is such an important year for the future of U.S. tax policy.
Yeah, so the individual income tax, also taxes for businesses, are scheduled to change pretty significantly on January 1st, 2026. And this change dates back to the Tax Cuts and Jobs Act passed in 2017. That bill made some significant changes to the individual income tax, raised the standard deduction, reduced statutory tax rates across the board, reformed the tax treatment of family benefits, reduced the burden of the alternative minimum tax, capped some itemized deductions. But those changes in the bill were only set to be temporary for budgetary purposes. So
8 years flies by when you're having fun in a
yes,
pandemic.
can't believe it's already coming up. That all those changes are scheduled, or the vast majority of those changes are scheduled to expire come the end of 2025.
So it seems like this creates a real friction point. Basically, nobody wants to allow everything to expire, and at least no Democrats want to extend everything. So depending on the complexion of this election, there are going to be a lot of moving pieces over the year ahead in what the tax code looks like.
Yeah. So the political outcomes, I think, on one hand, may change things quite a bit, but there's also the case that it might not change much at all with respect to the Tax Cuts and Jobs Act. So Republicans have been pretty clear that they want to extend the Tax Cuts and Jobs Act. They want to extend the individual provisions. They don't want taxes to go up at all, and they would push the whole thing through. Democrats, and this is in President Biden's budget, have stated that they also don't want taxes to increase, but they've set an arbitrary threshold. They said no tax increases on households earning less than $400,000 a year. Now, what that means for the extension of the individual provisions is that's almost all of it. That's about 75 to 80% of the individual provisions reduce taxes for households earning less than $400,000. So in terms of its magnitude, we're not talking about a large difference. The difference will be for very high income households and what they do there.
So let's talk about a couple of specific policies that were affected by TCJA and that are now kind of in flux. The state and local income tax deduction, or the cap on the SALT deduction, a big deal for a lot of centrist Democrats. What is the state of play, and how could you see the kind of SALT deduction evolving next year?
Yeah, this one is tough because it's not just Democrats that care about the state and local tax deduction cap, but also Republicans, some centrist Republicans, especially in the New York delegation. This cap set a limit on the state and local tax deduction at $10,000 for both singles and married couples filing jointly. And from a policy perspective, what this deduction allows is for state governments and local governments to raise taxes a little bit more and have their citizens be a little less sensitive to those tax increases. So it helps some high tax states keep their taxes higher. So representatives that represent taxpayers from these states don't like this cap and would rather see it increased. And over the past few years, these lawmakers from New York, sometimes California, have pushed to raise this cap as part of other provisions. Now, the challenge lawmakers face when it comes to the 2025 expirations is if you were to get rid of this SALT cap, you're going to greatly increase the cost of extending these provisions that already cost more than $3 trillion over a decade. Capping the state and local tax deduction is a pretty big base broadener or a offset that they use to reduce statutory tax rates.
One more specific issue, the home mortgage interest deduction that also was de facto capped. What's the state of play with mortgage interest deduction?
We haven't heard as much about the home mortgage interest deduction, which is interesting because this is one where at least 10 years ago, we thought was radioactive. You touch this and there'll be riots in the streets. But the TCJA proved that you actually can limit this, and the TCJA limited it in two ways. One, as you implied, it raised the standard deduction, so the likelihood that more moderate income households took the home mortgage interest deduction declined. But it also capped the home mortgage interest, or reduced the cap on the home mortgage interest deduction. So people under current policy can only take home mortgage interest deduction on $750,000 of principal, rather than $1 million prior to prior law. And so I haven't seen any discussion so far, but I'm sure it's another provision that's in play.
We're talking about simplification here. One of the things TCJA did that helps on simplification was increasing the standard deduction. More Americans with, can just take that standard deduction and get on with their lives in doing their taxes. How does that interplay as this law is set to expire?
Yeah, so the Tax Cuts and Jobs Act, I think, changed the way people interact with the individual income tax in a couple ways. Standard deduction is one of them. The law doubled the standard deduction, which made it much less likely that households itemize their deductions. So no longer will households have to deal with Schedule A. Now that's not a super complicated tax form, but it's one less step that a lot of households need to go through. Another important change that the Tax Cuts and Jobs Act made was to the alternative minimum tax, greatly increasing the exemptions and the thresholds at which those phased out. Made it so the number of high-income households that had to calculate tax effectively twice declined significantly. I think the statistic is that for households earning more than $200,000 a year, the number of AMT filers went from 33% down to close to 1%.
So what are you going to be watching this November? It's election night. Obviously, that's going to be an interesting night for a lot of reasons, not just for tax policy, but as you see who wins the presidency, what happens in key Senate races, what happens in the House, help me understand what the moving pieces are for how this entire debate shapes up next year.
Yeah, so it's going to depend on the outcome of the election a great deal, and I think there's a number of ways this can shake out. I think maybe the most disappointing, but maybe a highly likely chance is that the election overall is pretty close. So whether it's a Democrat or Republican in the White House and Congress is maybe split, or there's only a small majority in the Senate and a majority in the House of Representatives, what might happen there is that lawmakers decide to do what they did with the Bush tax cuts and temporarily extend them to a point where they could say, well, we'll figure it out later.
I can't imagine Congress just punting on a hard issue. Very unlikely.
Unfortunately, that may be an outcome. Now, another one is that they may do something like they did in 2012, which was what they did to finally address the Bush tax cuts, where they come to a deal and extend some of the Bush tax cuts, some of the Tax Cuts and Jobs Act, and let some of them expire, and maybe enact other tax provisions at the same time. That's another a possible outcome when you have sort of mixed control of the government. That's what I'll be looking at.
If I could put on my macro econ hat for just a second, this is a moment of considerably higher interest rates than back in 2017. Inflation has been a problem. Deficits are very high and set to stay high for a long time. Does that change the complexion of this tax debate? And is deficit reduction really on the table in a way it might not have been in 2017?
Yeah, I think that's the case. That because interest rates are higher, the cost of borrowing is higher, and the cost of borrowing to the federal budget is how it crowds out other spending, but also how it might crowd out economic activity in the United States is also higher. So lawmakers need to take seriously the potential budgetary impact of extending the Tax Cuts and Jobs Act. And I also think that simply extending the Tax Cuts and Jobs Act individual provisions and some of the business provisions is a missed opportunity. While the TCJA was called tax reform and it did make some important improvements to the tax code, it didn't fix everything. There's a lot that still could be done to simplify the tax code, to reduce economic distortions, and I think lawmakers should address those things as part of any discussion surrounding tax reform.
So to wrap up with one kind of final set of issues, the Inflation Reduction Act had a ton of money for the IRS. Part of that is about enforcement and trying to get tax scofflaws. Part of that's about customer service and trying to make the tax filing experience better for Americans. How's that going? What is the outlook for the way ordinary Americans experience the IRS and tax filing changing? Yeah.
So I think the additional funding to the IRS was an important step towards improving the IRS's interaction in terms of customer service. There's been lots of complaints about how it's difficult to reach them. I personally needed to call the IRS back in 2020 or 2021, and that was no fun. A lot of waiting, perhaps not getting connected to the right person. So having that additional funding in order to improve customer service is very important. Now, the future of that funding is uncertain. So Republicans have stated very clearly that they are uncomfortable with additional funding for the IRS. They are most uncomfortable with the increased enforcement. They believe that there may be political motivations behind who the IRS goes after. So it's possible that if we see Republicans in charge of the White House and Congress, that they'd be going after some of that funding that may have an impact on customer service as well.
It's funny, a lot of these debates, there's the number you have to pay and the amount of tax you owe, and the pain involved in getting there and getting that filed are both important issues, but they're kind of, they move in tandem as we talk about simplification.
Yes, and this reminds me of another important point, just talking about simplification, is that there's always a trade-off here. So it's not the case that you can simply just simplify the tax code. There's a lot of give and take when it comes to that. So when a lot of complexity in the tax code is due to provisions that are very popular, that accomplish important social or economic goals, and simplifying the tax code may mean reducing those provisions. For low-income households, for example, one way that the tax code is complex to them is the earned income tax credit. That's an important provision. It improves workforce participation among low-income households. It also makes the tax code more progressive, but it's a complex provision. So what does simplification mean? Well, you could get rid of the earned income tax credit, but that would change a lot about how much people pay, what benefits they get from the government. So it's not always straightforward to just simplify the tax code, and that there is a give and take sometimes between how much people pay and the complexity that they face.
Kyle Pomerleau, thank you so much for joining Axios this morning. Look forward to continuing the conversation.
Thank you.
Welcoming back to the stage, it's me, Nyla Boodoo. Good morning again. If you can believe it, our hour is almost up, but I want to welcome our final guest, another leading voice from Capitol Hill. Please welcome to the stage Texas Congresswoman Beth Van Dyne. Congresswoman, yeah. Congressman. It's always lawmaker is always a good option there. There you go. Good morning, Representative. We started this morning talking to your colleague across the aisle, Brad Schneider, and I wanted to start with you the same way I did with him. If you can give us a smart brevity summation of what you're most excited about with this bipartisan tax bill that is now at the Senate.
Well, look, we have been ever since I was campaigning, I'm talking to businesses in our district. We're talking to businesses across the country. I'm on the Ways and Means Committee, and we've been doing field hearings. And it doesn't matter what size the business is, it doesn't matter what industry. What they have been saying is the provisions that were in the Tax Cut and Jobs Act have enabled them to be able to invest in their employees, to be able to invest in their business, in some cases being able to bring their businesses from offshore back onshore. In order to make sure that they have consistency in being able to continue to invest, those tax cuts need to be extended. So I think I'm very excited that that the businesses have done their job in making sure that their Congress members and their representatives understand how important those are. It was pretty apparent the night that we had the vote that there was a little bit of confusion on the child tax credit on both sides of the aisle, but that the depreciation, the R&D, the expensing, so important in businesses. Mm-hmm. And I think that will be a very good bill if we can get it out of the Senate.
Right. So I want to talk about that. I also want to talk about, you were telling me backstage about whipping the vote that night. But first, I just want to go back to R&D and how important you think that is, especially when we think about inflation costs for businesses over the past couple of years.
We need to make sure that we are staying innovative, right? When you think about the things that we are creating, the U.S. is the stronghold across the world on that. But we also have to make sure that we're being competitive. We don't want to lose out to countries like China. So I think the R&D tax credit is so important, again, for American innovation, in making sure that it is a consistent policy. So the bill that we just passed out of the House, instead of having the decrease of the 20% over until 2025, what it does is it actually extends it at 100%, making it retroactive. Now, timing is of the essence because we've got, I don't know, some date coming out in the next couple of weeks, April 15th, and everybody's preparing their taxes. We've got to make sure that, okay, is that bill going to be passed, or are we going to have a whole number of a slew of people having to redo their taxes?
Which gets us to the child tax credit. Let's talk about that, because you were saying that particularly even when the vote was happening, there was some confusion on both parties about this child tax credit.
So again, I think when on Republicans, what I was hearing that night, and I always say I was dressed for, we had a press corps dinner that night, so I was in a gown, So I looked like a lady, but I sounded like anything but on the floor, trying to whip votes to make sure that people understood what we were talking about. Part of the child tax credit, the confusion on the Republican side was that we were allowing people who were in the country illegally to benefit from the child tax credit, and that absolutely wasn't the case. You had a Social
that's
Security.
never been the case.
Well, you had a Social Security requirement, which is actually one of the few entitlement programs that require a Social Security number to be attached to it. The other issue had to do with work requirements. During the pandemic, work requirements were relaxed. This brought them back. So that was a strong, and on both sides, by the way, because we're hearing from businesses that they are looking for people, that they are trying to hire people. So having that work requirement brought back helped everybody. And I think Democrats saw that as well. But what we were hearing on, and we're still hearing on the Senate side, is on the child tax credit, you've got folks on the far left who's saying it's not enough. You've got folks on the far right that are saying it's too much. When you are dealing with two bodies that are two votes on either side, a majority, minority, that seems to be a perfect bill. It is a compromise bill, absolutely, but it is it's far from perfect, but it's at least a compromise bill that I think the entire, both parties should be able to get behind.
Right,
and
so
you saw it overwhelmingly.
Right,
had
it's
support out of the House.
357 to
Yep.
72.
Yeah.
So then what is your message for your colleagues in the Senate now?
That you need to listen to your working families that are looking for job opportunities, listen to the businesses that are telling you that how critical this is. Look at the history of what TCJA was able to accomplish. The fact that you had increases in wages that we haven't seen in 20 years of almost 5%, that you had decreases in unemployment to just a little over 10%, some of the lowest in our U.S. history, the increases that you saw in investments in benefits and in onshoring. This is a proven fact. All of these policies are proven to be able to give, over $2 trillion over 10 years to our budget because of the increases in the economy and what they were bringing forward in revenue. That's important to know. This isn't just an idea. This has been tried, tested, and proven. And as a result, when you're looking at the inconsistencies that businesses are trying to deal with in today's workforce, they need to know that the tax plan, at least, is going to be there and that they can rely on it.
I want to go back to that in a second, but I just want to ask you first about the child tax credit.
Yeah.
When you're talking about your constituents, do you feel like from a financial literacy standpoint that we have done enough to convey what credits are available for working families?
I think we're trying. I mean, again, folks who are looking for it, there's enough opportunity to find it. Are we being proactive in pushing it out? Financial literacy is an interesting topic. I used to work for the Trump administration under Ben Carson at HUD. And his idea was he had envision centers that brought together at the local level surround services, continuum of care services. Financial literacy was part of those. But we wanted to make sure in those envision centers that they were being supported at the local level, and it wasn't anything that the federal government was having to continue to push grant dollars into. So I think the federal government can do a great job of organizing, but making sure that you've got the support, financial as well as political support at the local level in what you're teaching.
So when we get back to this idea of stability, I want to ask you about the tax code and what we're looking at next year. Mm-hmm. We were just hearing Kyle talking about simplifying doesn't necessarily, there's sort of complexities in simplifying. What are your biggest priorities as we're thinking about what needs to happen next year?
Well, again, I think adding some kind of continuity to the tax code, making the TCJA provisions permanent. We are pushing some of that in the last bill, but recognizing the fact that when you have such narrow majorities in both the House and the Senate, it's not going to happen. But again, it's a proven tool to be able to get investment and increase economic development in your country. So I think for me, I'm looking at, depending on what happens in November. Right? That's going to be important in what happens in November.
Let's take the presidency aside. Let's just talk about the House and control of it.
Well, I can tell you what in Ways and Means, Chairman Smith is being very proactive in putting together working groups that he's breaking down a number of different tax policies and putting us in working groups to work on it. So that depending on what happens in November, we will already have policy that is ready to move forward come January.
And you feel confident about that, those working groups?
I do.
And regardless of who's controlling the House or the presidency?
In order to get any policy passed, you're going to have a majority. So, but the working groups, I think, if you don't want to waste time, we have time right now. We understand what has to be done, making sure that we are not just kicking the can down the road, but legitimately working on policies that would be strong. If we have an idea of what the policy looks like, it's a much better sell to be able to go to our partners, our colleagues on the other side of the aisle and say, these are the benefits. Help work with us on it.
So you have been critical of the IRS most recently for its distribution of the pandemic era employee retention credit, the ERC funds. What do you think went wrong there?
A lot of money went out. We did not have enough safeguards on it. But we have had a number of internal audits that have given ideas of what could happen, that should happen, and the IRS has just not been quick enough in implementing those changes. As a result, we saw a tremendous amount of fraud. People were being able to apply. They did not have, again, enough safeguards.
You were even targeted for this fraud, like people telling you
I'm still targeted. How many people have gotten voicemails just in the last week saying, oh, your business qualifies? I'm like, do you have any idea what I do? Like, I don't think my business qualifies, but I'm still getting, I got 2 calls this past week on it, of people targeting. That needs to stop. But the IRS also, by just basically cutting off
right, because
small
they said
businesses,
they froze it.
They froze.
Because of fraud, though.
And people are having to shut down their businesses. We have a gentleman, Gil Herrera, a 4th generation restaurant owner, who applied early on. He's been waiting for years. He did the right thing, and that was why this was set up. He's had to shutter his doors. IRS is not being responsive. Find the fraud, fix the fraud, set up the systems, which, by the way, you've already been told what needs to be done to prevent it in the future. Do it. Don't just go on pause, because you've got businesses who are literally having to shut down, who are waiting for these checks because they had the idea, the promise that those dollars were going to be there, that funding was going to be there, and now it's not.
So do you think the pause in implementation has anything to do with staffing levels at the IRS?
No. I think they have a lot of staff. I think they needed to direct it in the right ways. And adding policies, which again the IRS has had to say we're not doing it yet, but trying to track people who are spending more than $600 a year. Is that really where we needed their focus? Was that really going to be helpful? Is that helping those businesses that are having to shut down, waiting for a check from the government? Is that helping on the Social Security aspect? No, but they need to redirect those employees' time in what's best service the American people, and we have not seen that being done. What we've seen, though, is they are continuing to ask for more money, wanting to hire more people, and it seems like it's to harass the middle class. It's not to actually help the people who need it the most.
When we think about simplifying the tax code, I wonder your thoughts about what that looks like. I mean, we've talked about a few things, but I just wonder if you can share a little bit of your philosophy about how you look at all of this.
I think people need to be able to take their money. It's their money. It's not the government money. It's not, when I always crack up, because look, I'm a former local official as well. I was on the city council for 6 years. I was a mayor for 6 years. And when people used to say government revenue, the government doesn't make money. The government takes money. Tax dollars should never be confused with revenue. And to your question, what do we need to do to make it simple? Allow people to keep as much money as they can. Make it simple, which means not continuing to collect by, for example, one of the things that we did with TCJ was we doubled the deductible, the standard deduction. That was smart. How many people are now having to identify everything that they spend and having to collect that just by doing that simple step? Allowing them to do more of that is helpful. Collecting information, increasing the amount in taxes, adding additional taxes, additional fees is not. And what I've seen in my first 2 years in Congress, when we were under a Democrat control in the House, was, again, an increased regulation, increased types of taxes. That is much more complicated than it needs to be. Get rid of that. On the regulatory side, under the Trump administration, for every 1 regulation you add, you got rid of 2. Helpful. Getting rid of those regulations is where we're seeing people actually be able to benefit. Increasing them hurts.
When we think about business owners and financial literacy. I wanted to just end on asking you about this. I know small business is such a focus of yours.
Yeah.
When all of these things that we've just been talking about, right? The child tax credit is something that when we talk about financial literacy for families, like gets a lot of attention. When we're talking about all of these other things for businesses, do you feel like small business owners have enough financial literacy and tools at their disposal to be able to tackle all of these things?
No, and we keep making it more difficult. We had a great witness who brought forward a 3-ring binder a couple years ago, and he was testifying. He's like, "This is a regulation you all are adding." He said, "For large corporations, they can handle it because they've got a regulatory department. I don't. In order for me to be able to make sure that I'm being, following this regulation, I have to hire somebody, or I have to get a consultant to do this. This is going to cost me $100,000. My margins are this. This will put me out of business if you add this." So what we're seeing from the small business side is they don't have all the tools that large corporations have, and it puts them at a definite disadvantage. So making sure, one of the bills that I had introduced with SBA is that if you're changing these regulations, you have to identify what's the cost to the small businesses. What is the cost of adding regulation? And then making it budget negative or budget neutral. That you can't keep layering this responsibility in these unfunded mandates in the small business sector, because it makes them non-competitive. Not only non-competitive with their corporate colleagues, but also internationally.
Well, Congresswoman, I'm afraid that's all the time we have for this morning. Thank you so much for being here with us today.
Great to be with you.
And thanks to all of you here in the room for joining us, as well as those folks who are virtually tuning in. Before we go, a reminder, you can subscribe to my weekly podcast. It's called One Big Thing. And be sure to stay tuned for other Axios events at axios.com/events. Have a great day, everyone.
Awesome. Good to see you.